got a guess for us?
Yes, I do.
Bring him in.
All right, shares of ARM, wow, are sliding. After what some regard as a disappointing outlook, I'm going to hold off from that characterization because we happen to have ARM CEO Rene Haas with us, first on CNBC. Rene, I don't think you would necessarily agree with the idea that you gave us a disappointing forecast last night.
Good morning, Jim, and please extend your contract. We love you at CNBC. You know, last quarter was a great quarter for us. First time in Q1 we've ever notched over $1 billion. We are super proud of that. Royalties were up 25% year on year. That's terrific. We've got new CSS licenses. We signed 3 brand new ones. Those are our compute subsystems. Those drive higher royalty rates. And we now have 5 customers in production there, so that's great too. And also, based upon all that momentum, we project by sometime towards the end of the year, ARM's market share in CPUs and data centers will be about 50%. So a great quarter.
Now, let's talk about ubiquity. When you reach a certain tipping point and where you are everywhere, then people write for you. Now, that is something that is very insidery. They write for you. I would love it if you could put it in plain English, because as you get more powerful, there is a flywheel that's real.
Yeah, no, thank you for pointing that out. You know, one of the things that people overlook about the compute platform that ARM is all the software that's written on ARM. We estimate that 22 million developers use ARM, probably 80% of all software developers in some way, shape, or form. And the more software that they write, the more demand is for chips that are ARM-based and products that are ARM-based. And the more demand there is for those products, the more software that gets written. So it is a bit of a virtuous flywheel that drives ongoing demand, and we've just seen that increase, particularly over the last number of years, where we were known primarily as a mobile-based company. But now, as I said, going to be over 50% in the data center, huge market share in automotive, significant market share across now in the IoT space, and also ARM-based PCs. So yes, it's really all about the software.
And I think it's important for people to understand that the reason why you are everywhere, among other things, because you have a terrific proficient model, is that you don't burn hot. And that is the thing, the commodity that people just don't understand.
Yeah, energy efficiency is what the company is all about. The company 35 years ago developed a processor that had to run in a package that didn't dissipate a lot of heat and had to run off a battery. So that type of sensibility runs through the DNA of all of our engineers. And I tell you, Jim, in the world of AI, where more and more compute is taking place, in addition to all the compute that has to take place traditionally, it's all about power and energy efficiency, particularly when you have these gigantic data centers. ARM is the only compute platform that can drive AI workloads, what we say, from milliwatts to megawatts.
Rene, it's David. Obviously you characterize the quarter as quite strong, but I am curious then why you think the stock is getting hit so badly this morning.
Yeah, I can't really comment, David, in terms of what investors are seeing or not seeing. The growth trajectory of the company has just been, incredible over the last number of years. As I said, we started these compute subsystems 2 years ago. These are building blocks that people use to build SoCs. They drive the highest royalty rates we've ever seen. We've had stronger demand for that than anticipated. And in fact, we've now expanded the offerings. We offered an automotive compute subsystem, what we call Xena. We have customers now in the pipeline for that. So we're seeing really strong demand for our products, fueled both by everything we're seeing with AI, but also, to Jim's point, the ubiquity of the architecture. So can't comment really on why the share price is doing what it's doing, but the growth trajectory of the company we're very, very proud of and happy with.
Okay, well, let's just talk about these notions of what the street was looking for versus you. There isn't an emphasis on royalty because it's just such a lucrative business for you. And Rene, people say 585 million, not enough. They were looking for 596 million. Can you explain to people at home how there could be a disparity between what is just a fantastic business by you and what the street was looking for?
We grew year on year 25%, and that's in the range that we've been talking about. We had talked about a 25 to 30% number. And again, I'll take a 25% year on year growth number, any day of the week. We have been talking about that for the last number of years. We have great visibility into our business, given the fact that The design wins that drive those royalties happened a couple years ago. So when we think about the go forward, and our business, Jim, as you know, it's a complex one because the activities that take place today really show up in results a couple years from now. So we have very good line of sight in terms of who's using ARM. We have very good line of sight in terms of the royalty rates, very confident of those growth numbers. And now these compute subsystem deals that we're signing the highest royalty rates we've ever signed, even higher than the first generation. So again, the growth rates we're very happy with.
Right, but I do think that people have to understand that one of the reasons why you talk about the future is that if you do go into a data center, you're an old hand with Nvidia. You worked at Nvidia, but Nvidia tends to like you versus the 86 model that used to prevail in this, correct?
Yeah, so Nvidia announced their product Grace Blackwell this year, and the big change, I would say, from the Hopper generation to the Blackwell generation was that Hopper was largely an x86-based product. They sold discrete Hoppers that connected x86. The next generation Grace Blackwell integrates the Grace CPU, which is ARM-based, with the Blackwell GPU, obviously the Nvidia product. Why did they do that? Power efficiency. The Grace Blackwell platform is 25x more efficient on power than the Hopper generation with x86. That's a game changer when you're talking about these gigantic data centers. And those decisions, as you know, Jim, to choose ARM to be ARM to be the Grace-based CPU, that was years ago. That happened a long time back. It takes a while for those products to be developed, qualified, put into production, but they're there now. And if you look at the future roadmap that's NVIDIA disclosed, what we've seen so far is all ARM-based, which portends well for the future.